Stefan here, just waiting. Hang on. We're live on YouTube. Not yet live on Twitter. That's coming on X, sorry. Here we go, live on X. Should be live on Twitch and now coming live on LinkedIn in a couple of seconds. LinkedIn seems to be the slowest. Still can't believe why LinkedIn hasn't really updated. I tried to take some pictures in LinkedIn by connecting to people, and camera didn't work really. So it's like really so far behind. Hey everybody, Stefan Rust here. I'm founder of Truflation. I'm bringing to you on the blockchain daily updated indexes and economic data, real world data available to anybody. And you can see it all transparently on the blockchain. So we make all of this available. I'm going to cover off in about 30 minutes. We're going to cover off a couple of things that have taken place, and that impacts everybody, right? So what's the economic situation look like? How's the market doing? What does that mean? And how do we interpret that? We're going to talk a bit about employment. That's quite a big number, quite a big topic. We're going to cover off some of the AI story and the AI components, fear mongering amongst AI. And then we'll go into some of the innovations that are taking place in Truflation and across Truflation with some of our partners. Obviously, the debt is always a big issue as well. So we might cover off something like that as a bit as well. So raise your questions. If you have anything, please let me know. I'll come to some Q&As, but I'm going to go through the whole podcast straight through, and then we'll revise it and revive it based on the input. Lots been going on, ups and downs. What a rodeo. I think a lot of the rumor is that people are just trying to shake, the institutions are trying to shake everybody out. The JP Morgans of the world, the MSCIs are trying to kick out and make it impossible for you to leverage with your strategy stock, take out any token related treasury or crypto related treasury product out of the MSCI. If you're in the MSCI, it forces everybody to actually buy the actual underlying stock, because a number of funds operate based on purchasing according to the MSCI. And if you buy MSCI indexes, they then go and purchase the underlying stock, which then helps drive up the stock. And both of them are trying to push out strategy or micro strategy from their portfolios. Why? Obviously scared. There's Mark Moss did a really interesting interview or analysis as to why they're trying to kick out strategy. Now, look, all the good things that strategy are doing, I don't say they're all good. I say they're all interesting. There's a lot of opportunity. They're trading below MNAV right now. I don't know. I came from the days when GBTC represented an institutional opportunity to buy Bitcoin, not directly, but you could buy it through GBTC as a replacement. Costs you a bit more than owning and holding your own Bitcoin. And I suppose the same is with strategy. And at those days, it would trade below the par value of the Bitcoin that they would have, and then above. And right now, MicroStrategy is trading below that. Obviously, it's a bit of a risk. And in everything I say in this show, do your own research. You've got to do your own research. I can't do that for you. You have to do it. All I'm doing is explaining my thoughts, my advice, my interpretations, and leveraging the data that we have from Truflation and from the internet, and thanks to AI, a lot of those AI solutions out there. I've just come back from a long trip, amazing trip, really 3 weeks on the road, maybe 4 weeks actually, if I include Rome. Went to a gaming conference there just to see how gaming and prediction markets are analogous. What are the correlations? Are there similarities there? And so a lot of interesting similarities. So check out the gaming space. I think we'll see a lot more, future finance or whatever we call prediction markets, but that's the future of news. It's the future of media. Media will be the interpretation of prediction markets. That number one. And how does gaming play along with that? What are the new forms of interfaces? What are the new forms of interactions going to be with these new forms of financial information and new forms of media? So that's going to be a really interesting evolution. And that's why I went to Rome at the Sigma conference. There was some 40,000 people there, all sharing their wares in terms of how to engage and build economic and real exciting user experiences. Then went to Hong Kong. Hong Kong was back again. It's close to China. Met with some really amazing people there, inside researchers, investors, and the interest. There's a lot of interest in bringing back investment opportunities. There's a lot of ideas in terms of what to leverage from the West and see what the movements are in China. China operates in a 5-year plan. You know where China's going. And one of the areas it's going down the path is robotics. And that whole country is leaning into technology. Technology is their way to leapfrog into the future. That is what they are pursuing. They've experienced that over the last 2, 3, 4 decades. And now they're hoping to see that again through the 90s, through the 2000s, the 2010s, and into the 2020s. And they are leaning into this AI engine and robotics, right? So they see robotics as a future. So check out, what are the robotic angles I could play in? Who are some of the robotic companies? There was a company in Shanghai called More Threads. More Threads. Check out More Threads. They listed on the Shanghai Exchange. They're the NVIDIA equivalent of China. Thanks to the sanctions, China has realized the importance that NVIDIA plays. These are ex-NVIDIA employees that have left and set up on their own. And remember, Huawei. What was Huawei? Huawei today is a mega telecom player. They are all former executives that used to work at Siemens, at Nortel, at Motorola, and they all left and set up and built out Huawei. And those engineering talents built up a company together with leadership, tenacity, persistence, and the leaning into technology, and obviously tapping into an engineering pool that is available in China. Over 200,000 engineering grads every single year at the top level from some of the top universities. And so that's pretty exciting, and something to be aware of. So not only is China leading into technology, and the money is focusing on investing in that, and you're seeing undervalued, compared to the US at least, undervalued opportunities in the China market. So how can everybody participate in that? How can others invest in stocks and entities over there to take part in potentially a growing market? Maybe not as transparent, maybe not as driven, maybe not as public, maybe not with the right kind of marketing drive that we are used to from American companies, but they still represent a huge opportunity, given the fact that companies over there are trying to bypass the challenges with sanctions. And there are still a lot of notion in the US around sanctioning China and not embracing it and trying to compete on a level to level basis. Maybe not give them the most cutting edge technologies, but give them some of the technologies so that there is still a marketplace, and that a market which has 1.3 billion people, has a consumer base of 1.3 billion, has an economy that is growing at 5-6% per annum. And it is not as big as the US, but it's the second largest economy in the world. So what to do around that, how to embrace it, and how to equally provide competition in China on the Chinese ground, right? And that is important. So don't leave the market only to them. That is the idea. And robots, right? Robots is also in the 5-year plan. So anyway, these were some of the feedbacks that I got on my trip out there. So that was interesting to see. Then went to the Middle East, equally leapfrogging, leaning into blockchain. The blockchain is the financial revolution, and they have witnessed that, they see that, and they are full on leaning in to the blockchain. Tokenizing real estate, tokenizing financial payment rails, making sure that everything DeFi, yield opportunity, trying to bring more and more assets onto the blockchain, enabling trading of that and participating in that and opening it up for everybody. That is really the goal. And you can feel that when you go to Abu Dhabi at the Finance Week there. It was amazing. The full on drive, engagement, and relentless pursuit in tokenizing and bringing blockchain to everything they're doing, from land registry through to tokenizing real estate. And one analogy that I thought was really good was, if you look at how China leapfrogged the credit card industry by just going straight to WePay and direct payments, using mobile phones, no longer physical credit cards, scanning recipes and menus, and paying via QR code, scanning those recipes and menus via QR code, all of it automated in a fashion that has allowed China to leapfrog in the payments mechanism and really accelerate the velocity of money by simplifying and reducing the cost of transmissions and remittances. The cost of remittances in the US using ACH still takes you 2 days to transfer from one bank to another bank. Costs you $5 or $20, depending on how much and what you're doing. The traditional banking system is dead. And they're beginning to realize this, and they're really worried. What do they do with this legacy business? And they're trying to lean in. And all they're trying to do is tokenize ETFs, tokenize old school actual products, and bring those onto the blockchain. No. We don't want that. What we want is to actually create indigenous, internet ground bottom up developed new ETFs, new blockchain traded funds, BTFs, internet traded funds. What are those ITFs? How do we create more of these financial products that are resonating with the population out there, with the people that are really trying to participate and create new types of products? You don't need $1 million. You don't need a year. You can do all of these products instantly on the blockchain, in the internet, on networks that are out there making a lot of this available. And once they're tried, they're tested, they're validated, there's interest, there's adoption, what happens then? Then all of a sudden, I can actually take these internet created financial products and bring those, and internet traded funds, and bring those to the fiat world, or invite the fiat world to invest in such products because they want to do that. Prediction markets is the first step in doing that. It's a derivatives product. It's a synthetic. Perps is another synthetic. We can create more and more synthetics on chain and allow traditional investors, fiat holders, to immediately convert that into stable coins and trade on the blockchain. And we don't need permissions, and we don't need to wait for the institutions to enable and allow us to do that. We need to do that ourselves. And so that's a large portion of just a summary of my trip, and that took up 15 minutes of this call. So I'm going to cut the rest of the 15 minutes short, but I just wanted to show you the momentum, the interest, the strength, and the velocity of change. Now, combine that with the competitive nature and the transparent nature that we have in the US. And the problem that we have is the resilience and the resistance against change. There is still a strong constituent within the financial community, within the population, within the inertia that resides in the population, within the laziness, or the I don't want to say laziness, maybe that's a bad word, but the lack of interest in participation in the Western world, and the fear mongering that is taking place associated with technology. You have Asia leaning in. You have the Middle East leaning in. You have technocrats at the top, the highest level, leaning in. What can the entrepreneurs do to equally lean in and be encouraged and be supported? What are those new levels? And they're no longer LLMs or layer one blockchains. They have to be applications that people want to use. They have to be utilities that people want to use in a user experience, and with a user experience that allows people to easily engage. I don't want a credit card anymore. How do I immediately get my fiat, my dollars that I have in my bank account onto and into a deposit on some sort of chain? Nobody knows it's a chain. You don't need to know what the underlying is. I just put it in there and it's all converted into crypto, into blockchain, into stable coins, and then it's all deposited there. How do we make it as easy as possible? And today, everything is digital anyway. You just open your app and you're in Robinhood, you're in Charles Schwab, you're in Line, in Revolut, in whatever. All these neo-tech banks have built out interfaces using digital only, mobile only interfaces. They're still tied to their respective jurisdictions, but they're all digital and mobile only. So once the funds are on there, it's super easy to engage in other solutions. And they do take custody. So how do we enable the custody, non-custody elements within those platforms to immediately bring more transactions onto the blockchain? And that is up to user experience. That's up to applications that are user-friendly enough, and applications that are going to bring out capabilities, content, and services that people want to engage with. That is the important characteristics, and those are things that we need to develop, and that is our task going forward. One big advantage that we have at Truflation is we have a shed load of data. Not only do we have a shed load of data, we have the Truth Network. So we have an SQL-based blockchain tuned for data, plus data. So we already have a lot of these available. And so in 2026, we will be launching a new suite of services, trying to build out the new media exchange finance corporation that is Blue Ocean. What does that look like? How do we make that happen? How do we drive and get user adoption? Those are all things that we're planning right now to bring to you for 2026. This is not my last podcast. I'll do another one before the end of the year, by the way. And we're sticking to a Tuesday cadence, and we're going to stick to the half an hour. So I got 10 minutes left to walk you through millions and gazillions of ideas. But yeah, no, I think the first thing we saw, obviously, was the rate cut, right? I mean, we all expected a rate cut. It was nothing new, pretty disappointing. It was only 25 basis points. But we did have some dissents on the FOMC. So people weren't all too happy, right? Fed cuts 25 basis point, no surprises. Very little data on inflation has been released since October, so we haven't seen anything. And it's still out on the 18th. So this week, stay tuned. We have a Spaces. Please sign up, follow Truflation on X, get the news, register now to get the notification for the Spaces. We will be doing that live during the briefing between and when the announcement comes out. So you'll hear the before and you'll hear the after. And we've already done our predictions. So we've already announced our predictions. Why? Because we can. We are up 24/7. We're on chain all the time. You can see all the data. You can see the balance calculations, all of that transparent and available to you. So here, very little data available, nothing new. We've always been saying that. They're using less and less data, by the way, so they're not even as accurate as they used to. And all the way, the FOMC is still saying, oh yeah, we use data. We're data-driven. We're data-driven. Where do they get the data from? Bureau of Lying Statistics. If the Bureau of Lying Statistics is giving you bad data with less data components, how are you going to make good, reliable decisions? It's really hard to do, right? Inflation eased significantly. We see a pickup. So Truflation, you can see a little bit of a pickup, and I'll share that with you in a little bit. But actually, I should share that to you right now. Bear with me. I will open link in new tab, and here I go to Truflation. You can see right now my dashboard. Look how beautiful that is. But inflation is now 2.58%, so it's been going up a little bit. And you can see that right now. I can click on here. Boom, there we go. That's what it looks like. So we've come down from 3 all the way down, and we're slowly creeping up. So you can see sort of from April onwards, we're slowly moving upwards, which is, again, year-on-year comparisons. This is this year against today, against the same time today last year. So this is year-on-year price change. If you look at it in an aggregate view, man, we're talking somewhere in the range of 28% increase, right? And so that's since compounded inflation rate since 2025. That's 28%. That's pretty high, right? So you've lost 30% of your purchasing power in that period of time. So that's just, again, bear in mind that when we look at the actual year-on-year comparison, it's only 2.58%. If you look at aggregate, which is what you're experiencing when you go to the grocery store today, you're seeing a price increase of about 30% on average versus 5 years ago. That's the reality, and that's what's really hurting, and that's what people experience. And that's what these Federal Reserve guys are trying to run and drive with, right? So bear that in mind. They have not been supporting you, and the wage has not been happening. Anyway, the other thing, layoffs and hiring remain low, unemployment edged up, right? So slightly changes there. And then here you can see some cool graphs that you can all find on the Truflation website. So check that out. But I really love this post from Adam Livingston. He really summed it up really good fun. The Fed just cut rates, which means Jerome Powell finally admitted the economy is held together by vape smoke, AI capex, and Klarna payments for Taco Bells. This is the moment every boomer gold bug feared. The fire alarm has been pulled. The money printer is warming up like a jet engine in a Michael Bay movie. So Michael Bay, he did all these, Top Gun, and those are all his movies. So lots of jet engines, fast moving. Bonds are about to get euthanized. Real yields are hallucinations. And every asset manager in Manhattan is Googling how to buy Bitcoin at work without getting fired. We are officially, so see JP Morgan and these institutions. And by the way, I was at a bank and they still don't want to touch anything that's doing with crypto. So there's still a lot of inertia in a lot of these institutions against crypto. We are officially entering the God candle probability zone. Bitcoin is about to do things that violate OSHA guidelines. Anyways, pro Bitcoin, as you can tell, all the money is alluding to money go wild, printer go burr. And by the way, the Federal Reserve is going to increase its balance sheet. What does that mean? They are going to start buying up T-bills, right? So here you can see balance sheet expansion. What does that mean? Debt grows on their asset side of the business. Why? Because the Treasury is issuing bonds, which the Federal Reserve goes and acquires. So they have the ability to get those, they are buying the debt for the Treasury. And so that's really what's happening, and that's what's really kicking in. And the magnitude of this investment that's needed is in the trillions of dollars of range, right? And so this is just the beginning of where this is going to go. Not only is interest rates going to come down, and Trump said he wanted to go down to 1%, we're also seeing the balance sheet at the Federal Reserve expand. So what we're seeing in the market today is a super nervous experience of what 2026 will bring. 2026 is going to bring about a change in the global economy that we have not seen before. We're going to see crypto assets dominate. We're going to see the US dollar dominate as a result. Federal reserves or central banks around the world are shaking, are shitting bricks because they're worried that all of a sudden the dollar will become a retail product and no longer that of a treasury because of the digitalization of it. And the US economy is about to grow at a percentage point that we've never seen before, 4 or 5%. And we're seeing AI being the core driver behind that. AI driving the rapid deployment of data centers, driving huge growth in construction workers, driving huge demand for energy, driving new improvements in the grid, in energy deployment, and new models of energy deployment. Not only gas, which is quickly to deploy, but we'll see modular nuclear reactors. We'll see all sorts of new innovations, renewables. We might see the life again of solar powering solar panels powering these new data centers. The data and energy requirements are going to be huge. The data center is going to be huge. This is resulting in huge construction work, huge manual labor. The white collar worker is at risk right now, and this is the first time that that is happening. Developers already are being supported with AI. White collar workers and analysts and financial traders are all being supported with AI. Supported. This AGI, ASI, superintelligence is not happening anytime soon. It is still input, output revision, input generation, output revision. That is what we need. And it's no different to computation. We needed to always do input. Computation has always helped us. Technology has always helped us get better, move faster, be more productive. That is going to continue to happen. We need to adjust to these new tools. And there are going to be a whole suite of new jobs that we don't even know of today. Who would have thought 10 years ago that, influencers are a full-time gig? Video producers are going to be more and more around, and no longer just the television stations, but now across all of the internet, on YouTube, TikTok, all these different channels. And they're going to be aided by these tools. So those are going to create more and more types of jobs. Are those exciting jobs? Are those the jobs that you want? Is that something that our educational institutions are ready to support and educate us on how to learn and work in such jobs? No, and no. Maybe yes. I don't know. But they're definitely not there. And then we're going to need a lot of different types of research. Why? How do we do and leverage these educational facilities to then do the research work into new molecular level biology studies that is going to allow us to have personalized medication? What type of research do we need to do? How can we accelerate the approvals of such medication to go to market? How can we allow us to stay longer, smarter, healthier throughout our life? How can we pursue our desires, the happiness all the time, and stay energetic and mobilized and excited for all the pursuit in that journey for happiness, right? How can we build all of that out? And that's really what we're trying to do. And I think that's what technology really allows us to develop. And it's not, everybody's worried about, debt's going to kill us. Everybody is in debt. The whole fiat ecosystem, other than maybe Russia, is in debt. For some reason or rather, Russia seems to be the least impacted by debt. The rest of the world is hugely impacted by debt. But where is the energy? Where is the liquidity? Where is the velocity? That is what we need to pay attention to. That's what we need to look out for. We see the velocity in the US market, the dynamism, the energy, the desire to grow again, the hunger, the competitive nature that's going to want to compete, to be better, to outsmarten, to outscale, to rapidly grow. China has that equal competitive. They've got the scale, they've got the mass, they've got the engineering talent, they've got the drive, and they've got the smarts at the government level to give them the air cover that they need. The rest of the world is really going to struggle. I see a lot of energy and attraction and pull within the Middle East, incentivizing the talent to move there, to suck up the rest of the world's talent to move to that hub on the world. You've got new presidents like Argentina, Chile just had an amazing election. What's going on in Latin America? How are they trying to change? How are they trying to reduce government and incentivize and attract entrepreneurship in those markets? Again, and what is the West doing? What's the rest of the West doing? What's Europe doing? How is Europe going to transition to this? How are they going to get energy back? We need energy. Energy is the core, essential ingredient to everything. For Bitcoin, you want the lowest cost energy to be able to mine the Bitcoin. And they go out and find the lowest point of energy to create Bitcoin. You see the same in other areas, right? We're seeing huge amounts of innovation that is needed. You've got great educational institutions in Europe, but you have an old legacy leadership that is afraid of innovation, that is blocking and holding on to the status quo as hard as they possibly can. They're too old. They don't get it. They're risk averse. They don't want to get sick again. They're all trying to control and protect their roles and responsibilities in an ecosystem that is crumbling. You have a centralized EU that is not elected, has no connection to the populations in each of the markets. And each of the markets are trying to figure out where populations are realizing that it is not as rosy as it looks. The existing governments in those local markets, countries, are no longer representing the population's interest. And so what does that mean for an EU, which is this bloatware on top of this decentralized federalistic states? And what are they doing? And how are they being represented appropriately as a macroeconomic power? We need energy. Europe needs to focus on energy. Europe needs to focus on innovation, get rid of regulation to enable and foster startups. And risk needs to come back. What is risk? Risk is represented in entrepreneurs and capital to fund that risk. You will lose a lot. You'll lose 10 to 12 out of 20. And the 1 out of 20 might be that home run to make up all the profits. Anyway, everybody knows this. I'm talking too much again, but that is really what's the situation around the world. And I just really wanted to feel and share that after my 4 weeks of travel around the world. Yeah, we saw the interest rates, there's a lot of stuff going on. Unemployment rates, the numbers, again, we've been bombarded with employment numbers, unemployment numbers, job openings, et cetera. Look at this, December 9th, JOLTS, job openings, right? So that's what they were showing. Q3 employment cost index, September state employment and unemployment index, November employment situation, October jobs openings and labor turnover. I mean, that's the JOLTS again, right? So lots and lots of stats and numbers and bombarding, and everybody's trying to interpret them in one full sweep because everybody still needs to be done. Why don't you just forget the old and focus on the latest and what is right now the situation, which is what we've been trying to do at Truflation all this time, giving you daily updates, consistently, ongoing, no worries. We still keep tracking and don't get bombarded with 15 reports in one go. So you're sort of always behind, but you're still trying to catch up. It's like, just stick it, drop it, and focus on going forward. I mean, that's what we've been trying to do. So here, retail sales, people are looking at, right? We're coming into the holiday season. And so that's a lot what's going on. Employment numbers, interest rates coming down. So a lot of people very nervous about that, right? And there were some really good slides here that Joey Politano has put out, right? Where he looks at blue collar workers, right? Change in blue collar workers. And he's saying employment growth is coming down. Which, by the way, if you look at this, I mean, this is 2025, right? And construction, why is that coming down? Because if I look here, Wall Street Journal just announced, and what's the source, by the way, of this data? Is the BLS data. We know that the BLS is a bunch of lying statistics. BLS. So why do we still rely on an old institution that has no relevancy in reporting, has a history of inaccurate reporting, has a history of not wanting to hire the smartest and best because they're too young? It's just ridiculous. and so we're still interpreting them. And then boom, the next page, sorry, here you can see the BLS is the core provider of this insight. And then here we have data centers are in a gold rush for construction workers. They are surging demands, means six-figure pays and more perks for construction workers. You tell me what the contradiction is in the Bureau of Lying Statistics and a Wall Street Journal that highlights data centers are a gold rush for construction workers. I don't know. I'll leave that up to you to decide and you to evaluate. But we think Truflation, and we have an employment index, by the way, at Truflation as well. And we'll have wage inflation. We'll be showing you how salaries are moving across the different categories as well. And here we also see across tech employment. And here, funny enough, tech employment seems to be growing. But everybody you talk to in the tech industry, lay off. So it's funny. I mean, again, the BLS is just behind the track, as we've always known. Lagging statistics is what we've been saying for a long time. But yeah, I mean, the jobs obviously are moving more tech. We need more tech workers. We're needing new types of tech jobs that weren't around a lot before. And so that's what we're going to be seeing. And you can see here, software publishers seem to be where the growth is. We need applications that are really going to drive this. But I think really the other thing is, if we're looking at tech and how that's going to change, AI is really going to drive growth, right? We know that. AI and easier money could supercharge the US GDP growth, right? We want to hit 5% growth at a GDP level that is far greater than anybody else's. So look at that, right? What does that mean and how does that look? And so here, David Sachs debunks AI jobless narrative, right? So what's that mean? Less jobs due to AI? No, he's debunking that. And if you go to the All In podcast, you will find out what he was talking about and what he means, right? And this transition, as I was saying, and that's why people are so nervous right now. We've got AI, we've got blockchain, we've got, all of the innovation taking place because of those two innovations in the financial services sector, in the medical sector, and a whole bunch of other sectors, right? Thanks to this economic transition, it means new people, new influencers, new power, new wealth distribution, new opportunities, and this transition, new countries taking different roles. The ability to grow is more and more essential right now. And what does that mean and how does that work? And so this is really the conversation du jour. That's what everybody needs to be talking about. And I'll do a podcast on Thursday because I think there's so much here and I cannot cover it all. So I'll be back. But I've already been 40 minutes in and I've been waffling way too long. Hope you found this useful. Please smash the like buttons. Let me know. We've had a lot of interactive here. What did you think of Stephen Miran's criticism of the PCE? I don't know what his criticism. That's Rudra Dev Singh 228. Sorry, Rudra Dev Singh. Sorry, excuse my pronunciation. What do you think of Stephen Moran's criticism of the PCE? Yeah, I don't know what his criticism was. Let me know. Send me the link. I'll have a look at that and get back to you on that. Maybe we'll do something. Follow us on X and find out our result. We'll post it on X, so you can follow us on X over there. I mean, I wanted to cover off a lot on the AI, what's going on there. I think just one thing I would say around AI: don't be scared what everybody's telling you. AI is a significant change, and it is a necessity and essential for the West to own AI, and it's to preserve the culture that we want. AI and technology, full stop, is who wins in any economic supremacy or domination around the world. And right now, we've got a two-man race. Everybody else is irrelevant. It's China and the US. And I think there will be two worlds. And by the way, one thing that was really interesting, there's an A16Z interview, and Mark Andreessen is talking about all the new AI startups going into A16Z asking for money using QN. They're using open source AI from Alibaba, QN. Why? Because they can just fork it and work with it and build on it without having to pay huge amounts of money, without having to go through huge approvals, worrying about significant lawsuits. This is what's happening right now. And so, what does that mean? And what can you do about that? I'll tell you what I did. I looked at the Alibaba stock and I see it very low right now. I see they have a huge cloud business. I see the Ali Cloud. I see what QN is doing. And I see and I hear interviews like this. And so I think that unless some of the AI LLMs, more AI LLMs go open source, that we will see a rise in Alibaba in the world. And so, is that an opportunity to invest in? I don't know. So there are 2 or 3 alphas in this video that you should do your research on. Do not listen to me. Go do your own homework, evaluate, assess, and tell me whether you think I'm smoking dope, whether this is something you think is great, and this resonates with you, and you think that this is something that, yeah, is aligned after you've done your own research. But don't use my statements in this podcast as research. One thing I did notice, and I really did want to share, because this is also a bit of alpha, which is, remember a while back, some of you that have been following us for a while, who of you out there have been following us for a while, we talked about and I'll share my screen again. Sorry, you're going to have to bear with me a little more. It's going to be too long. But I just want to share this with you here. I want to share screen, and I'm going to share with you our EV commodity index. We put this together roughly a year ago, where we broke down the types of EV vehicles. So you can see here how we broke this down, the type, and look at this. Ooh, the commodities needed for electric vehicles as a basket have risen. Oil has come down. Why? Oil is an essential ingredient for most costs. Heating, especially in the winter. We've got electricity. We've got, there was another thing that I wanted to share with you, but I'll talk about oil some other time, just alone on oil, because that was really fascinating. But here you can see the EV index is up, but what are we doing? You can see the types of essential commodities that are in this basket. And basically, the index is composed of metal intensity of each of the vehicle types' market share across the different EV vehicles: BEV, HEV, PHEV, and FCEV. And then rebalance is based on the spot price of the commodities. So here you can see, what does that now look like? So what does the composition look like? So here you have all of the elements, the 6 elements that are in the EV index, and you can see how they've gone up and down. And I did do a comparison, and it's lost its saving, but you can see it's rising significantly, largely driven by palladium, by platinum, these 2 elements, and cobalt. And so copper and lithium have not moved that much. Lithium is up a little bit, but these in aggregate have been really driving up the price associated with the EV index. Check it out. And maybe we will make this tradable for you. Thanks, everybody. Hope you enjoyed this. Please smash the likes. Let me know what you think. And if you are following us, join our spaces on the 18th, which is in 2 days now. So Thursday, we'll be doing our spaces. So maybe I won't do the podcast then, but we'll be talking about a lot of macro stuff on that. So stay tuned. I think Oliver will be there, Ivan will be there, and then we'll have a couple of guest speakers. I think I'll let the team do that, but sign up now. We'll go into some really interesting aspects around what's taking place in the oil industry. We'll cover off some of the BTF opportunities that Truflation has been working on, and how you can leverage Truflation as a driver and the model for buying Bitcoin, and how that outperforms just hodling. Thank you, everybody. Have a great week, and I'll see you again soon. Thanks. Bye for now.